What's going on, everybody? Thank you so much for checking in. In this video, we're going to go over SPY, which is the S&P 500 ETF, and we're also going to go over our watch list for the week ahead. This watch list includes names like Tesla, NVDA, AMD, Apple, and Meta. We're going to give you all the resistance and support points that you need for these stocks. That way you know exactly where to enter, where to take profits, and where to cut losses if necessary. So let's go ahead and get started by first talking about SPY, and we're going to do so on the daily candles, where we can see that SPY last week broke back below a very key trend line. Now, if you've watched our last few videos, we have been talking about this trend line where in the past we have gotten rejected at strongly and sold off for weeks. Now, in the last few weeks, we have tried to get above that trend line, and you can see that both times we failed and we moved back below it, with Friday getting rejected right at it and ending the day just above the 10-day moving average. If we zoom in a little bit closer, we can clearly see how strong this trend line is. We tried to move above it, and as soon as we moved back below it, you can see that there was a fight to get back above that point, and then we sharply sold off to end the day, closing below the 440 mark. So if you're coming into this week and you want some levels to focus on for SPY, of course, 444.30 is still going to be the biggest breakout level. Where did we get that number from? That is simply the highest point that SPY has reached in recent history, which is the highest point of the year, in fact. So we will need to break above that point for buyers to comfortably go into the market and push it towards 448. If you are bearish on the market, then you need a break below 431.15 for bears to completely take over. However, we are currently in an overnight downtrend coming into this week. So if we break below 437.05, we can potentially see 434. A put position is possible at the break of 437.05 towards 434. However, just keep in mind that swinging calls or puts right now on SPY is very dangerous because we are considered to be range trading. We're neither in a breakout nor in a sell-off. Right now you can see that we're consolidating in one big range. So movement is going to be very choppy, and overnight movement is almost going to be unpredictable. So keep that in mind if you are trading this week. If you are bullish, you need that breakout above 444.30 for you to swing calls. If you are bearish, you need a break below this level for you to swing puts. Now, before we move on to our watch list, we're going to have to talk about some key events that we are watching this week that are likely going to cause a lot of movement in the market. And those are going to be, first of all, earnings season is going to kick off this week with companies from various sectors reporting last quarter performance. First, we have financial institutions like Citigroup, Wells Fargo, JP Morgan. We also have some consumer defensive companies like Pepsi. And finally, we also have travel companies like Delta. So all these companies will start reporting, and this is a great start to an earnings season because it will give us an idea of what general industries are doing across the board, from consumer defensive to travel to financial institutions. So it's a great start to our earnings season, and we're going to get a lot of important data that's going to foreshadow what could happen for the remainder of the earnings season. Apart from earnings season, we're also expecting inflation data. Inflation has been cooling down for most of the year, so this is great news, and this is the reason why the Feds didn't feel the need to raise rates in their last meeting. However, last week we saw the labor market report, and after it came out, chances of the Federal Reserve raising rates in their next meeting went from 36 to 46%, which clearly upset market to end the week. You can see that market sold off. So, with that being said, if going into this week we see inflation uptick, that will raise that chance surely above 50%, and markets are more than likely to sell off. So pay very close attention to what the CPI and PPI reports bring this week. And finally, to cap off the week on Friday, we are also expecting the preliminary reading of the Consumer Sentiment Index. This index, which measures consumer confidence, rose 9% last month. You can see that this chart shows the gain. So we want to see that going up. As we go into summer and more people spend money on travel and things that they want to do, we are expecting that consumer confidence report to continue going up. And now that people have put the fears of the banking turmoil behind them, it is likely to continue that trend up. So things are looking healthy and projections are looking well. But the main report to watch this week will be that inflation report, because that is tied directly to interest rates, which will affect the stock market directly. So now let's talk about our watch list, and we're going to start with Apple, where we can see the stock just recently made a new all-time high. However, the stock has not been able to break above that level. Recently, the stock has pulled back to a low of around 189, and it's doing a good job of holding above the 10 and the 20-day moving averages, which is also trading right around 189. So looking at the shorter term candles for Apple, if you plan on trading it, you need a close above 193 for you to safely swing calls, but the true breakout is going to be above 194.48. Where did we get that number? That is simply the highest point that Apple reached and got rejected. We do expect Apple to continue its rally towards 200 above this point, so that is going to be our price target if you are bullish on Apple. If you are bearish on Apple, you will need a break below 187.55 for it to move back towards 185, and then a second downside price target of 182.60. The next stock on our watches is going to be Tesla. Tesla, like all other names on the market, is consolidating right now, and it's just cooling down from a very large upside move. If you're looking at Tesla on the daily candles, you can see that the stock has a very strong downside gap to fill, but it hasn't broken the support yet that it would need to break to fill that gap. Here are some levels to watch on Tesla. If you're looking for a bullish breakout and a bullish continuation, obviously you need a move above the highest point that it reached here for it to continue towards its next price target of 289. So if you're bullish and you want to take on calls, you can take on calls above 284.25. Place a stop loss just below that point, and your first price target would be 289 to take half your profits. You would then update your stop loss from 284.25 to around 289, and your second price target would be around 296 to 300. Just keep in mind that if you are planning to swing calls on any of the stocks we've talked about or we're going to talk about, most of these companies are expected to report earnings in the next few weeks, so make sure that you're planning for that when you're taking on your strategy. Now back to Tesla, if you are bearish on the stock, you need a move below 272.80 for it to begin filling that gap down towards 261 to 264. So if you are bearish and you want to take on puts, you may enter puts at the break of 272.80, and your stop loss would be placed just above that point in the case that it reverses back up, and your downside price target would be around 264. When you do take on your put or bearish position, make sure you watch it closely, because even though it's pulling back, the market is still generally in a bullish trend and it could reverse at any point. So just keep that in mind if you're taking on any bearish or put positions. Now moving on to our next stock on our watch list, it's going to be NVDA, and NVDA has been consolidating in the same range for weeks now after it's made its breakout from its earnings. You can see that the stock is potentially forming what's known as a bullish head and shoulders, which means it is inching and slowly moving its way to move higher, but it's still not ready for the breakout. Let's go ahead and talk about some levels to watch for the week ahead. First of all, you need NVIDIA to move above 432.15, which is the double top that it got rejected at in recent history. You can see that NVIDIA got rejected at strongly around 432 here and once again here. So it will need to move above that point to restore bullish confidence, and you can potentially trade it towards 440 on the breakout above 432.15. But the true breakout is going to be above 440, which is NVIDIA's all-time high, which is right around the 439.90 mark. Let's call it 440. Above that point, it is considered to be a bullish breakout or a blue sky breakout, and it can rally on as long as volume and momentum is there. So you'll have to watch the stock closely and make sure that volume is present above 440, and then you would set your price target based on momentum. If you are bearish on NVIDIA, it is not really safe to swing any puts on it unless it closes below 396.50. Anything above that point, it would be considered a day trade if you plan on taking on puts. So for example, if it breaks below 413.60, you can potentially take on a put or a short position as a day trade towards 406 or 407. But it's not safe to swing puts unless it moves below this level. The next stock on our watch list is going to be AMD. Now AMD, unlike NVIDIA, has suffered a very different fate. You can see that the stock has broken below its 2023 highs, and it has been selling off, and it's been getting rejected at its 10 and 20-day moving averages. So let's talk about AMD on a shorter term time frame and see what's going on with the stock. First of all, if you are bullish on AMD, you're going to need a breakout above 120 for it to move to a price target of around 124 to 126. If it moves above that point, then the next upside price target is going to be around 133 to 134. If you are bearish on the stock, you can potentially take on a short or a put position below 110.30, and the downside price target strictly for a day trade would be 105 to 106. You would need a close below 105.55 for you to safely swing puts towards a price target of around 100 to 101. Last but not least, the final stock on our watches is going to be Meta. Now, to everyone's surprise, Meta did not rally last week, even though they released a brand new app that got millions and millions of new users within just a few days. Meta reached a new 52-week high last week at 329, but it happened in pre-market, so nobody was really able to capitalize on the contracts for that move. So if you are looking for a bullish breakout on Meta, obviously you need a move above 300.29 for it to break out into a new price target. Now, if you are bullish on the stock, you would simply need to move above 296.25 to ride it towards the 300 level, but the true breakout would be above 300. If you are bearish on Meta, it is a little far away from being fully bearish, so you would need to move all the way down to 276.05 to safely swing puts towards 268, but it is very unlikely to do so this week. Obviously, this is a very ambitious downside price target, so don't aim for that this week. Focus on these support points here. If Meta can't stay above 288.54, then it's going to sell off towards 84 to 285, which is its next available support. And below that level, it could see 280 to 281. So there are a lot of events that are going to influence our market this week, so make sure you're preparing correctly. If you are an options trader and if you plan on swinging anything past this week, then make sure you're giving yourself at least 6 weeks until expiration, because with earnings coming up, things are going to get very volatile and markets may not move as smoothly as they've been moving in recent history. Thank you so much for checking in. Make sure you subscribe and like and check back in for our next video.